Welcome to today's market report. European stock markets are seen opening lower on Thursday as investors take some profits after this week's strong gains, with COVID-19 cases continuing to mount and optimism over the ready availability of a vaccine weighing. The DAX futures traded 0.7% lower, CAC 40 dropped 0.6%, FTSE 100 fell 0.8%. Global stock markets have soared this week following the positive news from US pharmaceutical giant Pfizer over the COVID-19 vaccine it is developing in conjunction with German partner Biontech. However, some of this optimism is starting to wane as investors take stock of logistical challenges of mass producing and transporting the vaccine, as well as the number of COVID-19 cases throughout Europe showing no signs of slowing down. The official coronavirus death toll in the UK passed 50,000 on Wednesday, the most in Europe, with more than 300 people have died across the continent. European Central Bank President Christine Lagarde cautioned on Wednesday over expecting too much too soon from a COVID-19 vaccine. She says, while the latest news on a vaccine looks encouraging, we could still face recurring cycles of accelerating viral spread and tightening restrictions until widespread immunity is achieved. Economic data Thursday showed the UK economy grew by 15.5% in the July-September quarter, a rebound of sorts from the record-breaking fall of 19.8% between April and June. However, growth slowed to 1.1% in September from August's 2.1%, suggesting more tough times to come. In corporate news, Deutsche Telekom raised its earnings guidance as its reported forecast beating third quarter results, lifted by outperformance at its recently merged US unit T-Mobile US. German engineering group Siemens also reported better than expected profit at its industrial business. In the UK, luxury fashion group Burberry said it would push its prices up after its sales nearly returned to pre-pandemic levels in its fiscal second quarter, while insurer and asset manager Legal & General announced a new 5-year dividend growth policy. Oil prices edged higher on Thursday, buoyed by news of a potential coronavirus vaccine and signs of falling US crude inventories. Crude futures traded 0.1% higher at $41.50 a barrel. Brent rose 0.1% to $43.84 per barrel. Both contracts are up more than 12% this week. Gold futures rose 0.3% to $1,867.30 per ounce. On the FX front, GBP/USD witnessed some follow-through selling for the second consecutive session on Thursday, around 130-180 region, and had a rather muted reaction to the UK macro releases earlier this morning. The data comes in on the back of persistent Brexit-related uncertainties and continued undermining the sentiment surrounding the British pound. It is worth recalling that an Irish minister said on Wednesday that EU-UK negotiators are now set to miss their mid-November deadline for a new Brexit deal. Bank of England Governor Andrew Bailey said that they have talked about yield curve control but don't see any great need for it at the moment. We do not have a date in mind for negative rates review outcome. A great deal of work needs to be done with banks in deciding if negative rates are doable. The comments did little to influence the British pound or provide any meaningful impetus to the GBP/USD pair. Following the release of the Q2 GDP report, Rishi Sunak said steps we've had to take since to halt the spread of the virus mean growth has likely slowed further since then. My economic priority continues to be jobs. There are still hard times ahead, but we will continue to support people through this. A pullback in the US equity futures drove some haven flows towards the US dollar. This in turn further contributed to the offered tone surrounding the GBP USD pair and contributed to the retracement slide from levels beyond the 133 mark or 2-month tops set in the previous day. Later during the early North American session, traders will take cues from the releases of the latest consumer inflation figures and the initial weekly jobless claims data from the US. Euro-dollar was down 0.88 this week, near the 50-day simple moving average at 117.68. The support could be breached if the German 10-year bond yields extend Wednesday's losses in a euro-negative manner, with traders shying away from riskier currencies as they readjusted their expectations surrounding a COVID-19 vaccine. The dollar index was up 0.1% at 93.073. This is today's market news. Thanks for listening. We'll see you next time.